Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, November the 10th, 2017. A lot of people are celebrating Veterans Day. Happy Veterans Day if you serve for our country or your country, U.S. or Canada. Thank you for your service. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans, and we do create multiple hypotheses, two main hypotheses, then two alternative. And we're not trying to hedge our bets. What we're doing is we realize we don't know what the market's going to do. But what we can do is look at what the normal auction would be like, depending on who takes control, and then create the plans based on that, wait for the market to open, and then realize who's in control, and then execute the plan that best suits the market. This way we do not have to create a plan on the fly. We know what levels we'll be looking for. We know where we're looking for rejection and acceptance of price. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to session during the pre-market, and then we do live trading and analysis during the course of the trading day for our members. Please read through the disclaimer. I bring it up. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, in any trades that you see for Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's take a look at yesterday. Yesterday, our Hypo 1 was open auction out of range, a push up to test the prior day range, possibly push into this LVN up here, and then finding responsive sellers and working our way down, with our main target being down here in the back down at the microcomposite VPOC down in the 72 area, and this naked VPOC here. Our key line in the sand for range expansion and possibly a trip down towards the 61.75 and the 61. That's a naked close and a naked VPOC. So we still have that gap that's open. And then we had our weekly target, ATR downside target. Our weekly 20-period full session ATR is running at 34.81. So off of the all-time high that we put in on the Globex at 94.50, the downside weekly ATR target is down at 25.59.75. So Hypo 1 just played out beautifully. And, we got down here. We did not bounce off of the 70 level, and then they pushed through. But they just didn't get to the closing the gap. The buyers stepped in. The buy the dip, the plunge protection team. I don't care what you buy. Look at it. You could see it. This was very clear if you looked on the book map when those buyers took in and took control. And up until this point, we had created a neutral extreme by breaking the IB high and the IB low, and then we were in this extreme. So you're thinking, wow, okay, we're going to finally see the first day of a correction that is 0.5%. We have not had one of those. I think it's the longest in history since 1969. Was the last time we went this long without a correction of 0.5%. Algo stepped in, took control, and then we come right back and go neutral again by breaking the upside high, and you think, okay, they're going to go neutral extreme on the close, and we have a target up there at the 85 and a quarter that we were looking for, and we just barely missed it. We did close right near the highs, so we were expecting to go up and hit that 85, and in the Globex they actually went to the 85.75 before selling off. So let's just step back for a minute. Yet one thing I wanted to point out is yesterday in the pre-market session, we talked about the fact that range expansion is very often precluded in the Globex, okay, with volume in the Globex. And you can see, let me just bring up this, and I'm going to just change this to a 30-minute. You can see that here's the relative volume down here. The black outline is what the normal volume is, and you can see in this Globex session here. Here's yesterday's RTH session. Here's the Globex session. You can see, and we talked about this yesterday morning, that we had heavy participation from OTF. Another time frame volume was like 300 and I think it was like 350,000, which is incredible. Then we get this range expansion. Buyers step in, the buy the dip crowd come right back in. Nice strong V bottom. And then so far in the Globex, we've gone and we hit the target of 85 and a quarter, pushed through it to 85.75, and then we sold off and we've come down to this 70 area again. That 70 area is becoming a very, very important level for us. It's created a bit of a weak low here. You can see how there's no real taper down here. We've created a double distribution. So our over-under line is going to be very clear today in terms of this 79 area, 78, 79. And our key line in the sand is going to be down here just below the 71, 70 area again. And again, you can see overnight that we've had OTF participation, and that participation is larger to the downside. So we'll be watching this 71 area very, very carefully if it breaks for that move down and a push to test yesterday's range low, but more importantly, go down to those naked VPOCs and the naked gap, the gap that's still open down there at the 61. But let's just take a step back, take a look at the economic news. We don't have a lot of economic news today. We've got 10 o'clock, we've got consumer expectations and sentiment out of Michigan. We've got 10:30, we've got the ECR weekly. These are not really big releases. And then 1 o'clock, we've got the rig count. And 2 o'clock, we've got the federal budget. But that's about it. There'll be some headline news coming out. There's some more news about some senators, and there's discretion as well as the tax plan. They put a tax plan out yesterday that's slightly revised, and it's going to go to the vote next week. So there'll probably be some headline news there. There's no real earnings today. Earnings is light. There's no after the market earnings at all. So one of the things that I like to do is I like to just take a step back and take a look at the market macro to micro. And the way I do that is I use my TOS. I like the drawing tools here. This is my paper money, but I get live data because I used TOS for my options. But I don't execute for futures. I use my IRT and my Transact and AMP for that. I like to start with the monthly, so let's go to the monthly so we can see. And what I'm doing here is I'm taking a look at where we are in relation to the 9 EMA and the 20 SMA. That's where all my moving averages are. And what I'm looking for is the strength of the trend within the time frame. Do we have good slope, good separation between the moving averages? That shows me strength of trend. And where do we come down and challenge the trend by breaking below the 9? And where do we violate the trend by breaking below the 20? I also use this for candlestick and chart patterns. You can see that we've been following this upward sloping pitchfork for quite some time. We were riding the center line. We got above. We were looking for a move up into the upper line as long as we hold the upper channel. So good slope, good separation. Trend is completely intact. Even a pullback and we haven't seen a major pullback for a while. Even a pullback to the mid 2400s is not going to violate the overall trend on the monthly. In fact, it would be healthy to have a pullback, okay, and pick up buyers for a Santa Claus rally into the end of the year. Going to the weekly, you can see same thing, good slope, good separation. Now, pay attention that yesterday we went down and we tested the 63.25. We've been basically one-time framing up now for 9 weeks on the weekly. The week low from last week is 62.25. So if we get the low 62.25, then we're finally violating the one-time framing up that we've been seeing on the weekly. We're in our 12th month of one-time framing up on the monthly too, and we don't challenge the trend until we get to the 25.50 on the weekly. Going to the daily, we have been following this upward channel. Price has been paralleling the 9 really nicely, and we have not closed below, even though we've come down a couple times and broke below the channel line, we've been closing above it. Yesterday was the first close that we got below the channel line and the first real violation of the trend. So we're losing some slope, we're losing some separation, we're below the 9 on the daily, and we've tested again overnight the 20 SMA, and you can see that 20 SMA is sitting there at the 71.50. So if we fail to get back above the 9 and back above that double distribution from the overnight session, and we come down and we break this, we could see the start of a trend change. But this is the first possible clue, although we do have strong buying. Now, it is a Friday. It is kind of holiday-ish because of Veterans Day tomorrow. So, this wick, anytime we get these large wicks, there is a possibility that we get stuck in this wick as we auction this area off that wasn't fully auctioned yesterday. We did not get any price acceptance within this wick, and I'll talk about that when we get to the composite. Just moving to the intraday. On the 4-hour, you can see that we have broken below. We've tried to rally and get above the 20 and rejected, and now we're back below the 9 and the 20 with slope and separation to the downside. So we've got a possible trend change on the 4-hour. Going to the 30-minute, you can see that we have had a strong downward trend, and they're trying to take it back. And right now we're trading between the 9 and the 20. If we get above the 20, there's this naked cross up here at the 83 level, and I'd be looking for us to go up there. Do I believe that the all-time high is in? Absolutely not. This is what we call a unadjusted or unequalized high. This high was put in the Globex. It is a double top as well up there, and the RTH traders do not like to leave all-time highs put in the Globex. Does it have to get taken out today? Absolutely not. But it is something that we're going to be watching. And we have these naked crosses above, and we've got some naked VPOCs above as well. So we have some repair work to do above, but right now it's looking like we're coming down to do some repair work to the auction below, and we'll talk about those levels in just a minute. Just going one more level down, let's take it down to the 5-minute, and you see that the 5-minute, we've come down and we've based, and we put in a higher low. And we're starting this trend up, but starting to weaken here. We do have a double bottom down here at the Globex low at the 71.50. So this is a weak low, and why it's so important that we watch for any break. But let's take a look at the overall structure. So just a little context for those that are joining us. We come up, we broke out of this longer time frame balance that we are in that is centered around this 67 area, and then we came up and we balanced here on the gap up, and we balanced here at the 24.97, and then we went into price discovery, and then we came up and we created this balance here with the value area is at 74.25, and the low is at 42.50. and then we create price acceptance in around the 49, come up, try to break out, can't break out, pull back down, take a trip through value, and then the buyers step in again. We get this nice hammer here. 2 days of balance. They accept value higher at the 62 area just before the breakout. Then they break out. They hold value at the 73 area, go make a new high, try to hold value up here at the 25.90. We can't. And then yesterday we come back down and we almost got to that 62.25, okay, which would be coming back to pick up late buyers and rotate, which they did. And then we closed outside of the value area with the smaller time frame micro composite that goes from October the 20th through, with our micro composite VPOC at 73, with the value area of the longer time frame just above it. So this whole area right here between the 74 and the 71 is extremely important. I do not believe if we come back down here and do not bounce off the 68, I don't believe that this 62 is going to hold this time. I think we'll pull. We'll have to come down lower to pick up buyers and come down towards this 49. Now we do have a hammer again here. Typical hammer rules was in play. We did not get above. We're not going to close above the hammer and open above the 85.50 area, the high of yesterday, I should say. Which was the 84.25. So right now we're inside of the body. We're just chopping around this CHVN at the 77 area, and we have to watch the 74 and the 71 area as clues. So let's take a look at the overnight. Overnight inventory is pretty much net short. Probably 95% net short. We've got this double distribution with this the 79 right here. We just rejected the midpoint. This is going to be our over underline. Above it, we're looking for a move up into the 83 area and possibly continuation up towards the 85.75. And you see that the LVN, from the overnight session 2 nights ago, yesterday it was double distribution, and it's that 84 level that we've got to pay attention to. So let's start moving our levels over for our trade chart. Our overnight low is at 71.50. And our overnight high is 85.75. And then our overnight VPOC could shift. It's always hard when we're doing this. We could see a VPOC shift to the 77.50 or the 76.75, but right now it's at 74, so we'll just mark it there for the time being. And then we have this LVN at 79.25. I'm actually going to use the 80 as my over underline. And then, of course, we've got the that 70 area that's all important. So we don't need any more of this. We can get this out of the way, expand this out. So we take a look at this a little bit better and start putting our other levels. Now, our 20 period full session ATR, average true range, is running at 1389. That's expanding again after getting down below that 11 last week. So off of the low overnight of 71.50, our upside ATR target right now is 85.25. And off of our high overnight of 85.75, our downside ATR target is 71.75. So you can see that we have essentially traversed the whole daily range. And this makes it all more important on the 70 level. And I'm going to move my, my key line in the sand to that 70. Why not the low of the night at 71.50? Because I want to just have a little bit of a buffer zone, because this is a key line in the sand. This changes the context for me to get much more focused on the short side. The over-under line, gets me looking to the short side, but if we get below the key line in the sand, then I'm starting to look for trend type tendencies and a bigger move down. Now, our week open is 25.80. So we have one day left of a average true range of 13.89. So 25.80 minus the 13.89 gives us our weekly critical mass down here at 66.25. What does that mean? Well, the theory on critical mass means this: if we get below this, the 25.66.25, we're below the daily range, and we're in range expansion or price discovery, and there's little possibility for the in this circumstance the buyers to get the close above the weekly open at 25.80, and a lot of times the buyers in this case will capitulate, and the sellers can take control into the weekend, and we get a drift down or a liquidation break down below the critical mass. So you really want to look for acceleration of the direction and trend once you get below critical mass. We're nowhere near critical mass to the upside, but let's just put it in so we've got it as a guide. So 25.80 plus the daily ATR of 13.89. So our upside, critical mass for the week is all the way up at 94. And basically, that's only 2 ticks off of the all-time high, and that'll take us into new all-time highs into the week. Is it possible? Sure, it's possible. Anything's possible. Weekly. Oh, can't type. Up. Okay, and so in terms of the levels, now again, we've got to pay attention to this 77, but we're just moving it up a bit into the 80. But we do want to pay attention to that, because below that we're getting into the wick. And one of my hypos, in fact, one of my main hypos, is to come down and get stuck in this wick down here and repair the auction. This was not properly auctioned. They went down at a V bottom. We went down. We went right back up. They did not determine fair price in this area. The last couple times we've been down it on this wick and on this wick. So a lot of times when that happens, if we don't get above and back inside of the body and hold, we'll just get stuck and go sideways down here as they mature the auction. So that level right there, I'm going to pay attention to the 74 and the 73. That was also right near the mid and the IB low from yesterday, and the developing value, or the value area low from yesterday. So this whole area right here between the IB and the value area low from yesterday is going to become a trade zone for me. We do have our VPOC down there, and likely to go down there. And then below that, I'm looking for a push down to test the 71 and a possible break below the key line in the sand, and and move down into this wick and get stuck for a good portion of the day. So hypo 1 is a open auction in range, in value. We do have a taper on the bottom, but it's not really, it's very boxy, like I said. So I'm looking for an open auction in range, a push up into this 80 level, And somewhere between 80 and the naked close of 83, I'm looking for responsive sellers to rotate us down, come down, and test this 71 area, take out the overnight low, and then push down and go sideways between the 71 and the 63 with late day probe down into the 61 to close the gap zone, find buyers, put in a higher low, and rotate us back up towards the 73 and closing somewhere between the 68 and the 73. That is hypo 1. Hypo 2 is an open auction, in range, a push down, take out the overnight low, test the 2570, find buyers, rotate us up back into the VPOC, and come up and chop between the VPOC and that double distribution area, and then push up and close the gap, and basically close up here in the 83 to 85 area with a possible break above the overnight high, taking out both the overnight high and the overnight low. That is hypo 2. Hypo 3 is a open drive. Buyers continue to stay on this. Failure to take out the overnight low, come up, fight the 79.80, and then push up into the gap, close the gap, chop in this area as we fight this 84 area, and then push up into this 90-91 area, and taking out this naked VPOC and naked close, and then closing somewhere around this microcomposite VPOC. The 3 days we tried to hold value up here at the 90.25. Hypo 4 is a breakdown, a open auction, failure to close the gap, push down to the 70, fail there, push down into the 61 area, and then fail and come down and test the major support line. Our major support line is down here at the value area of this micro composite down here at the 55-56 level. And if we get below that, then we're likely to make that trip down to where the overall microcomposite VPOC is, which is still down here in the 25-49 area. So those are my 4 main hypotheses for the ES. We take a look at gold. Gold is now trying to hold that 81 level. So expand this out here. Come on. I hate the drawing tools on IRT. You can see that the value area here is 86. We've been looking for the break above the 83 level. We're holding the 81, 82. I'm expecting, if we see some weakness in the indices, for gold to break above the 86 and finally come up and hit our target here, up here at 92, 93 area. This 76 area, this is the composite VPOC that goes all the way back to October the 24th, 2008. And we came down and we based here. We've got our higher low put in, and then we've got the overall price acceptance drifting up slightly higher to the 77, 78 area, and now we're trying to get above that 83. If I put a 2-day profile in here just to see the 2-day balance, actually 3-day balance, it is right here at the 84, 85 level, and we're just chopping around there. So key levels to pay attention to: 81. You might even want to use 80. Below that, target the 78, 77, and then ultimately back down here at the 75, 80, back to the magnet that has been holding us in place here. If we can hold the 80 and get above the 86, look for them to push up into the 91, 93 area. That's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.